Hello traders, and welcome to the StockGoodies Chart School. First, let's take a look at an ascending triangle. It's characterized by a flat top with levels of resistance and a rising trend line at support levels. Near the end of the chart pattern, as it forms into the point here, volume generally falls off, and what you want to see on a breakout above the upper trend line of resistance is huge volume on the breakout, and on this one it got it, and it ran from about 350 straight up to 5 in just a few days. Did a little consolidation, some more good volume came in, and it broke out to new highs again. So this is a bullish continuation pattern, usually found in uptrends. It's a period of consolidation, and volume is what you want to see on the breakout above resistance. This is a bearish descending triangle. It's a continuation pattern, usually found in downtrends. It's characterized by a flat level of support and a descending trend line at resistance. Volume will usually fall off near the end of the chart pattern, and when it finally breaks below support, that is very bearish and will attract more sellers. This is a very reliable chart pattern. Two of the most common and useful chart patterns out there are the double bottom and the double top. We'll cover the double bottom first, which is a reversal signal after a long downtrend that can signal reversal of trend back to the upside. Okay, it's characterized by after the fall, it sets a first low. It rises and then pulls back. This level right here is the level of resistance it needs to break above in order for an uptrend to begin. Okay, so it comes down from the neckline resistance to the second low, and it works best if the second low is just slightly higher than the first low. Okay, volume falls off as it continues to form the second part of the W chart pattern. Okay, right at the breakout point, huge volume comes in to send it from about 70 cents straight up to $1 within about 2 weeks or less. So this is a very bullish reversal chart pattern. One of the most common and useful bearish reversal chart patterns is called the double top. That's because it has two highs. One here, the second high is here. It's best if the second high is equal to or a little bit lower than the first high. The important thing to remember is neckline support, which sits right at the low here. Once broken below is extremely bearish. As you can see right here, when it broke below support, it fell, bounced back to this level of support, made it resistance, and then broke below this support and fell from about $8.40 down to $7.70 in about 2 weeks. So this is a very effective bear reversal signal. This is a bullish cup and handle chart pattern, usually found in uptrends, so it's a continuation pattern. This is the cup. Imagine a coffee cup looking at it from the side, and here is the little handle. This is the neckline resistance that it needs to break above to be bullish. And what you want to see on a breakout right here above the neckline resistance is big volume, and it does that. It broke above resistance, pulled back to it, bounced, and made it support for the next leg up, which was characterized by huge volume on this breakout above this resistance. So this is a very bullish, a very reliable chart pattern. This is a bull flag. It's a continuation pattern usually found in uptrends. As you can see, there was a trend line here at resistance, and when it finally broke above it on volume, it went up very nicely from $6 to $8. It ran flat. It consolidated for a while. It formed a bull flag. What you want to see on the break above the resistance trend line is huge volume, and it got it. biggest volume on the chart so far. It sent it up from just over 8 immediately to above 10. It did a pullback just below 10 and then broke out to above 12. So this is a very reliable bullish chart pattern. This is a bearish head and shoulders chart pattern, usually found after a nice rise in the stock price. It is a reversal signal, and when you see it, it is very bearish, and it works very well. A head and shoulders is characterized by a head, which is the highest point, and then the shoulder. Either one of these could be considered shoulders, and they can have multiple left and right shoulders. This one only has one right shoulder. Okay, but basically what you're looking for is this trend line of support that if the stock breaks below it, it is very bearish, and usually the fall is pretty dramatic after a head and shoulders forms on a stock chart. This is a very bearish and very effective chart pattern. This is a bullish inverse head and shoulders chart pattern. It is a reversal pattern that's usually found at bottoms. The head will be the low or the bottom. The left shoulder is over here and the right shoulder is over here. The neckline resistance that it needs to break above is right here. And what you're looking for on the break of resistance is huge volume, which is exactly what happened here. And this stock ran from just above 15 almost to $20 in just a few days. So this is a very reliable, a very common chart pattern. So when you see an inverse head and shoulders forming at a bottom, that could signal reversal of trend back to the upside again. This is a bullish pendant chart pattern, usually found in uptrends. It is a continuation pattern because when the stock finally breaks above the resistance trend line, that is very bullish. And at this point, the volume on this day here was the breakout. That's exactly what you want to see. It ran from about $8 to over 10 in about 2 weeks. So this is a very reliable and common chart pattern. There are two chart patterns on this particular chart. This one right here is a cup and handle. Okay. First of all, the handle, the volume when it broke above resistance at the handle of the cup and handle was huge, the highest on record so far. So that was bullish. It did break out, and then it had to consolidate because this run from way down here to up here was getting a little steep there, so it had to run sideways to cool off the indicators. Now this is another example of a bullish pendant, which is a continuation pattern in an uptrend where the stock consolidates, volume falls off at the end, and what you want to see on the break above the upper resistance line is again huge volume, which sends it from $10 to well over $12.50 in just 2 days. So again, what the cup and handle said was the stock was beginning an uptrend. It broke out, had to consolidate, got the volume it needed to break above that resistance and run. This is a bullish rectangle. First of all, nice volume on the breakout above this resistance. It ran from about $7 up to $11. Then it did a 3-month consolidation, okay, with a slightly lowering trend line of resistance and a slightly lowering trend line of support. Now, when it breaks above the resistance line with volume, that is very bullish. And as you can see, the stock ran from just over $10 to over $14 in about 1 week. Here is another continuation pattern. It is a bullish symmetrical triangle, usually found in uptrends. It's a period of consolidation with a rising trend line of support and a lowering trend line of resistance. And as usual, what you want to see on the day of the breakout above resistance is huge volume. This one gets it, and within 5 days runs from $20 to just above $30. Again, a very reliable bullish continuation pattern. This is a bullish wedge. It's a continuation pattern usually found in uptrends. It's a period of consolidation characterized by a trend line at resistance that is pointed down, and also the support levels are going down. As always, a break above the resistance on good volume is bullish, and in this case the stock ran from $13 to over $14